Hello, you're watching The Pitch and I'm Sarah Allen. If you think you know commercial property, perhaps it's time to think again. I'm joined by Mark Vonic and Linda Rudd from Realside Property to talk all things commercial property. Linda, Mark, welcome.
Thank you.
Thank you.
So to begin with, Linda, can you give us an overview of commercial property and the sectors it includes?
Yeah, so commercial property encompasses all sectors. That's office, that's retail, that's industrial. And then we have alternative sectors such as your build to rent, your healthcare, your storage. On the office side, commercial property can range from everything such as your local commercial smaller office accommodation where you have your small to medium enterprises to the skyscrapers that line our city skyline. Of course, retail can be the simple cafe that's at the bottom of your street to the larger shopping centres that house multiple fashion retailers and supermarkets. And of course, industrial is everything from logistics, warehousing, to then light or heavy manufacturing.
What's one of the biggest misconceptions about investing in this space?
Biggest misconceptions, first of all, I'd say that it is actually easy to manage. And so I think a lot of investors, when they, or if they have the capacity to do so, will quite often buy commercial real estate directly, but it can be tough to manage. So you really need to have a clear eye on your strategy. There's leasing issues, you need to find good partners, consultants, managers to work with, which is why I think it's actually a better outcome for investors to invest via managers, but managers that have a great track record, particularly as it relates to performance or managing across the sector and the assets that they are presenting.
We think there's a differentiation between direct property and REITs. So they behave differently even though we use the same asset class to invest capital. So we in the direct space tend to be quite specific about the assets that we acquire. And we come in and out of the market. So often you find with REITs it's an aggregation over a period of time. And so when there's a rebasing of values and they trade at discounts to NTA, that is very visible to the investor public, but they may not necessarily appreciate that groups like us don't necessarily have the same valuation pressures because we've been somewhat more circumspect in what we've acquired through the cycle.
Mark, what are the three key rules that you use when you're selecting a commercial property asset to invest in?
It really needs to be compelling enough both for us and for the investor. So that's rule number one. Second thing is it going to be an asset that can perform through the cycle? Can we manage the risk? Can we execute on the strategy? And what are the options? Is there a plan B and C if plan A doesn't work? And then the final point is just getting that balance right between risk and reward.
Linda, how can investors use commercial property in their portfolio? How does it work?
So commercial property provides an attractive, or can provide an attractive income stream to investors, but also give investors access to capital growth. That's of course subject to asset and sector, but that's a way in which investors can really balance commercial property within its investment portfolio.
Mark, can you share a couple of examples of properties that you've invested in the past and how Realside have managed them?
Yeah, so we've got a couple of office assets that have exhibited 40 to 80% returns on capital. And so these are assets that are still holding value during the current cycle and are performing through the cycle. So we have an example in our industrial development business of a brownfields asset that we bought in Perth for 17.5 million. That asset is currently on our books at 45 million. And that hasn't been as a result of yield compression or yet rental growth. It's just been old-fashioned asset management. So we have, when we acquired that building, it had a net income of $700,000 per annum and largely vacant. We understood the market well enough to split the building, create smaller leasable spaces that were going to find demand in its sub-market, and we now have that income up to over $2 million. So it's an example of finding those bespoke opportunities where we can, bring our own level of asset management expertise, if you like.
Thank you both for sharing your insights with us today. If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.